Okay, welcome everybody to Trade Talks with the Pup. So this is going to be the first week where we're moving things around a little bit, just tightening up the presentation. So now we're going to have it on Wednesdays, every Wednesday, 4:10. We're going to do a Trade Talks and we're going to do a midweek review. So the way I'm going to kind of do this today, I just want to go over the three trades that I took today. I did take some other trades, but more quicker trades. Like I took the CCIV towards the end of the day and things like that. But that was printing's call out. So I just want to review the trades that I looked at, what I was seeing, and why I took them. So let's start there. So welcome everybody. Good to see you all here. Darren, Lopez, Stephanie, Steve, Troy, Vincent. Troy, welcome to OTE. We are a family here. We trade together. We make money together. We lose money together. You know, we're no egos here. We're really just trying to uh, get the community together to trade well, make some money, have a good time, and share some laughs. So let's start off with, so this was my public post this morning. AMD over 91.44, Lulu over 371, NIO over 50.61. I also put out a last minute, I think it was Square. Let's see. Yeah, Square over 251. So Square and Lulu didn't trigger today, but AMD and NIO, boy, did they trigger. So let's talk about AMD first. Now, funny thing about AMD, I don't really trade AMD that often. So if you look, see 91.44, that was my trigger. Let's go down to a 5 minute time frame. And I'm going to take my clouds off and we'll just put on my EMA ribbon. So just to reiterate, for those of you who are new to the group or don't know how I trade, I like to use the TTM squeeze with RSI over 50 and stacked EMAs, very similar to how Nick C uses it. So what I was watching for, the first thing I'm going to do is I'm going to mark off where the start of the day is. So let's find the open of the day. So that's right here. And right off the bat, AMD was going. Now my trigger was 91.44. All right. So that was my, or nine, was it 90.44? 991.44. Okay. So let's mark off my entry 91.44. All right. So opening range candle, wicks through it. So we don't want to take the trade on this candle because you didn't get a 5 minute close. I mean, if you want to, you can go down to a 3 minute candle, but for me, it's a little too fast. I still like the 5 minute. I know printing likes the three. I tried the three out for a little while. It was okay, but I still like the five. Let's just, for lack of a better term, for shits and giggles, let's look at the 3 minute. Okay, so the 3 minute, you get a wick through. The second 3 minute, you get a hammer, but not a breakthrough. The third 3 minute, that triggers our entry. So here you're entering the calls. Now, I recommended the 91 Cs. You could have went with the 91 Cs or the 92 Cs. The reason why you're going to go closer to at the money on a stock like AMD is because those contracts are like 60 cents, 70 cents. Doesn't really make sense to go that far out of the money, to be honest. So I actually recommended the 91. Last minute, I changed it. I went with the 92. And I think I got a fill, I don't even remember. It was somewhere around like 70 cents. And right off the bat, it just screamed right up. Now, where I first took profit was right here, right when we lost the first candle, lost that 8 EMA, which is our yellow line. Let me go back to the 5 minute because this is more how I trade. And so right off the bat, it went right to this candle here. And from this move up on the 92 Cs to here, that was about 150% trade on a weekly. So excellent trade. I exited about half the trade there and I kept the rest on because what I noticed was we were just stuck in a range, right? We were just flagging here. So massive flag, right? Pretty much like that. Let me fix that. Pretty much like that. And so no reason for me to take this off. Now, yes, you can get a little concerned when we lose the 21 EMA here, but this whole time, RSI is staying over 50. We're setting up in a squeeze. So for me, I've already taken half the trade off at 150%. So the trade is already paid for itself. And I've stressed this in the room. If you're taking trades like a weekly day trade and you're able to hold into this move and capture 100%, oh, apologies, 1 second. All right, sorry. Sorry about that. That was an emergency broadcast about the heat wave we're getting here. It is pretty hot. So anyway, what I was saying is if you can hold off and sell on something like this, if it's screaming, no reason to take anything off until you get that first red candle. And right at about here, you're at about 100%. So at this point, you could take half the trade off, sell half your contracts, and now you've completely recaptured the premium that you initially put in. And so anything you're holding after this is profit. And so if the trade fails and comes back to the entry point, the only thing you've lost at this point is profit. And so for me, I find it psychologically better to be able to hold trades if I can sell half at 100% and then wait and see what happens. Especially since it's Wednesday, you have 2 more days for those weekly closes. And AMD came strong right out the bat with Micron, MU, having earnings after the close today. So that was one of the reasons why AMD was on my my target list, because it has been moving. So I figured, you know what, semis might move today, and look what happened. Semis moved today. So then you see we get the break of the flag, and it still consolidates a little. So we had a 5-minute squeeze fire off, and it really wasn't too much to write home about. And then we went right back into a squeeze here, and then look what happened. So you get another flag forming here. And this is why pattern recognition is so important. And then you get a break of the flag, 3 more dots in, and then you get the squeeze fire. So, you know, I think at the end of this, I'm only holding runner, like maybe 1 or 2 contracts, and it's already at like 300% at this point. So that's that was the AMD trade. Any questions about what I did, how I took it, why I selected the contracts? You know, any questions at all whatsoever to this point on the AMD trade? Because I'm going to move on to NIO next. The other thing, while I'm waiting to see if any questions, you notice that the moving averages remain stacked. We did get an 8 crossing under the 21 here for a few candles, but it popped right back over. So the trade itself is intact the whole time. There's no reason to take the remaining off of those contracts. Now, sure, you want to scale out. And, you know, I have been stressing the last couple of days, you know, take quicker profits, take quicker profits. So let's say you even took this trade, you could have taken off like, you know, 30% here, 60% here, and then your next quarter, maybe 100% here, right? And then it leaves you a quarter left on that trade. And then you could hold the remaining quarter, you know, maybe put a stop loss at like 50% or something like that, and just let it ride from there. Yeah, Troy. So, okay, great question. So Troy's asking, is the entry I chose from a previous support resistance? So the answer actually is no, but yes. And it's a little tricky, right? The actual entry was over, I believe, a previous high. Let me just double check that. Let me put after hours on. Why did I pick 91.44? Right here. No? Why did I pick 91.44? It may have been back here. This candle here, let's see. 91.44. Let me double check that. Yeah, 91.44. I'm not actually sure why I did pick 91.44. I thought, let's see. So this high here was 90.32. That's a really good question. I'm not sure now. I'll have to go back on my notes and see. But I did have 91.44. So you had a high here of 89.89. This is what got me really interested in the trade, because once you break this high here, you're going to want to look back to your previous high, which is right here. And that's basically 95 even. So I think we still hit 95 maybe tomorrow. No, it wasn't an intraday fib because I took the trade right off the bat. I'd have to look into it. I'll get back to you on that. I'm not really sure. I apologize about that. I could have sworn that that was a previous day high. I'll look into it. But in any regard, normally, yes. Normally, it's either a previous day's high or a support and resistance level. It's probably a support and resistance level. Let me extend 9144 out. Yeah, it looks like it's a little bit of a pivot point with a couple of hits here, 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 here. The problem with how I'm doing this, I don't trade off of TrendSpider. I trade off of Thinkorswim. So my support and resistance levels are only on Thinkorswim. I don't do double work on putting the support and resistance levels on Thinkorswim and on TrendSpider. It's just too much work. TrendSpider I basically use mainly for my charting and for like major fib levels and looking for patterns and things like that. All right, so hopefully that answers the questions on AMD. Let's take a quick look at NIO. So NIO, I'm pretty sure it was from a previous high. So NIO entry was at 5061 and previous high here looks like it was 5080. Let me go down to the 5-minute. Yeah, so basically you see the resistance here at 5040. Hit it here, broke out here, wicked right there, wicked right here. So that was basically why 5040 was my entry on NIO. So let's look at the start of the day. Yep, right there. Very similar move on NIO versus AMD. So 5061, I apologize. So 5061 was my entry. I believe that was the high right here. Yep. So check this out. I'm going to put my entry right there, 5061. That's my entry. So the minute we open up, look what happens. We break that entry right away and we hold it. You could even wait to the second 5-minute candle because it wicks right back down to about 50, 70, okay? So even if you miss that opening range breakout, you can hit it on that second candle on the pullback to the 8. So your entry is pretty much here. And where is your first exit? Right here, right on this breakdown on that 8 EMA. Now, if you were patient and waited for the candle, the next candle pops right back above it. So really, you don't even have to exit here. Let me get my little arrow, guys. You don't even have to exit here because if you just wait that one candle, now your exit is back here. So, you get a little bit, but it's a decent move. So from your entry to your first potential exit, let's see, that was a 4.5% move, but that was about 120 to 130% on, what did I take? The 52s? Yep, the 52 contracts. Now, why did I take the 52s? Because my target was 51.50. I could have taken the 51s. I could have even taken the 50s because in the money calls for NIO and AMD, they're cheap. They're less than $1. So I think these were, I don't even know. Let's see. 51, no. I don't know where it is. Okay, so NIO's entry was at 85 cents right here. When you're up here, you're at about $2. I don't know where we finished off for the day. I don't have TOS open at the moment, but I exited most of the trade. I think I did 50% here. I did another 25% here. And at this moment, I'm just holding, I think, 1 or 2 runners because you know, the trade just hasn't broken down. You could see we were flagging here, right? And it broke the flag. We were in a squeeze for most of the rest of the day. So I don't mind holding during the squeeze as long as it doesn't fire to the downside. You get a squeeze firing to the upside here, but not much of a move. It didn't even come back to the high a day. But I'm going to be watching NIO tomorrow for a move over today's high day. So tomorrow, what you may see is watch AMD over 53.84. Let me just check after hours. Yeah, so we're still flagging after hours. So we're good. So tomorrow's trade plan is going to be, you know, probably the 55 Cs for this week over 53.84. So pretty straightforward. Both AMD and NIO calls went well over 100%. I believe they both even went over 200%. And if I'm not mistaken, I think AMD went over 300%. So, you know, this is one of those trades that unfortunately it doesn't offer you an opportunity to get a pullback entry. If you miss that first entry, you're not getting a pullback to the 21 until here. And by the time you get here, the trade's already done. So, you know, that's the trick, right? That's really the crux of trading. Sometimes you need to be patient and wait for the pullback if you missed that initial entry, but you have to understand that sometimes that initial pullback is not going to offer you an ideal entry. If you get a pullback within the first, let's say 5 to 15 minutes of the trading day, and then it starts to bounce, then you could take a trade. But you know, this is now almost 2 hours into the trading day, and now you're getting your first pullback right when it goes into the middle of the day where things slow down. Makes no sense to take a trade in this range here. Okay, let's take a quick. Any questions on NIO? Troy. Okay, so I don't use log scaling, and I'll tell you why. I've found that log scaling only really is beneficial when you have a stock that's made a huge move, like a stock that goes from $5 to $80 in 2 months. You need to use a scale, log scale, because otherwise it's impossible to kind of get an idea of how the candles are moving. But most of the time I'm using, normal scale. So F. Lopez is asking, do you enter on the close of the candle or right away on the touch? So that's a great question. And I think every trader is different. And I think every trade is different. Most of the time, I'm entering on the breakout. And what I will do if I enter on the breakout is if that breakout fails, I'll stop out of the trade immediately. I'll take a 5% loss, 10% loss, whatever it is. If I wait for a candle close, then I will take the trade. And if it starts to break down, I'll give it a little bit, maybe another 5 or 10 minutes. And if it just continues to break down, then I'll stop out there. The key to trading is take quick losses. Too many times traders will hold a trade after a trade breaks out and fails because they think or they hope that it's going to break out again. And hope is a very dangerous thing for a trader. So we need to take emotions out of our trading and just look at it from a technical standpoint. If the trigger entry is $50 and you break $50 and then it fails in the next 3 to 5 candles, take the loss, take the 5% loss, take the 10% loss. And then when the next time it breaks out, take the trade again, if you're up to it. Okay. But to hope that something breaks out and then fails and to hope that it's going to break out again is just a dangerous thing, because the next thing you know, now you're down 25%. Now you're down 50%. Now you're down so much that you don't want to stop out because you're afraid that the trade's going to turn around and come back higher. And then it goes down, and now you're down 70%. And now you're down so far that you might as well just let it go to zero, because you figure if I sell it now and it goes back up, you're going to shoot yourself, for lack of a better term. I don't mean literally shoot yourself, but, shoot yourself in the foot. So this is all psychology, and I know I've talked to some of you about these things. I've been there and I'm sometimes still there, but you know, books like Trading in the Zone, Letting Go, these books really will help you identify why you're doing these things. Why are we selling our trades too early? Why are we not cutting our losses soon enough? It's all psychological. And if you take the psychology out of it and you take the mindset out of it and you just focus on the technicals, your trading will improve. The problem is we are emotional creatures. You know, humans are very emotional, and it's very difficult to take your emotions out of your trading. You know, I'll say this: if you have a bad day, if you had a fight with a friend or a spouse or a relative or whatever, if you overslept and you woke up late, if you didn't get a good night's sleep, if you've got things on your mind, if you can't be in front of the computer for the entire 6.5 hours of the trading day, then maybe you should think about not trading and or not day trading. I think that's really important. Um, if you can stay in front of the computer for 6.5 hours for the day, then you can day trade. But you have to recognize that there are days where it's easier to trade and there are days where it's much harder. And I think the last 2 days it's been much harder because SPX and QQQ have been stuck in a range. They're consolidating. Tech has been running hard and now it's taking a breather. And so when that happens, you have to understand that taking no trades is sometimes the best trade. Wait for those days where the market is running and everything is running, and you throw a dart at a stock chart and it hits and you win. You know, many people fail to understand that. They want to take trades every single day, and you can't. You cannot take a trade every single day. You could only take trades when your rule set allows you to take trades, and that's why having a rule set is really important. So I digress. Any other questions? Yeah, listen, you know, Steve. So Steve is saying, I find swing trading better for me. Absolutely. That's how I was for the first 2 years of my trading career. I could not day trade. I would win and I would lose, and I would win and I would lose, and it would get frustrating, and it would kill my trading psychology, and it would affect my swing trading. And so I stopped day trading until I felt like I was ready to mentally tackle it and give it another shot. And I worked at it, worked at it, worked at it, worked at it. And, you know, I'm going to say I'm not the greatest day trader. I'm not. I've gotten much better in the last year, and I'm still trying to get better. I do find that at times I do have a hot hand, um, but then sometimes it just goes cold. And for me, I have to recognize that when I go cold, I need to just stop taking trades and just focus on the names that I like, the trades that I do well in, and just wait for those ideal setups. There are levels for every stock, but not every level is equal. Okay. Uh, you know, like Tesla. Can you trade Tesla from 686 to 700? Absolutely. But is it better to wait for over 700? 100%. Okay. So understanding not only how to trade, but what to trade and where to trade it is really important. When you throw options into the mix, now you got to get strikes right. You got to get timing right. It gets really complicated. So, you know, Stephanie, I know you've been talking about options for a while. You know, it takes time to learn those things, you know, and I wouldn't rush into it. But the other couple of things I'll talk about just before we go on to the next trade. Um, you know, F. Lopez, I know you mentioned, not to call you out, but I know you mentioned that you haven't had a winning day this month. And I believe Alvin AS, you know, mentioned, you know, take a day or two off. I think that's great advice. Anytime I have back-to-back losing days, I try not to trade the next day, just so I can clear my mind. I can take the time to review my losing trades. I can help understand you know, what was it that I did wrong, and you know, keeping a trading journal, and it's not just about where you enter and where you exit. It's your mindset. What gave you the inkling to take the trade? Why did you buy where you bought? Why did you sell where you sold? These types of things, when you start looking back on your trades, you're gonna have aha moments. You're gonna have, you know, realizations that, okay, every time I take a pup trade, I lose money. Well, guess what? Stop taking my trades. You know, I'm not going to say that my trades work for everybody. Sometimes my trades don't even work for me. Like I don't trade Boeing, I don't trade AMD, but if I see good setups, I'm want to be respectful of the community and say, hey, this is a great setup. Maybe someone else would be interested that trades Boeing and AMD really well. So I try and do those things, but the one thing I'll leave you with is you cannot wait for me to A, enter a trade, or B, exit a trade. I will give you the information, but it's so important for your own trading psychology to take the trade that you see. You can use my levels, you can use my call outs, but you have to own your own trade. And until you, as a trader, own your own trade, you're always going to be relying on other people to call the trades out for you. And so it's okay to do in the beginning, but you got to get better at reading the charts and learning the levels. And it just starts with a couple of stocks. Learn 2 to 3 stocks. And when you really learn those levels really well, then move on to another couple and then start adding it on. And after 6 to 12 months, you're going to have 25 stocks in your back pocket that any given day you can go to and say, hey, Roku's breaking out today, or Tesla looks hot today, or NIO looks primed to run. And you don't have to worry about, scrambling to chart it out and finding what the levels are and everything like that. So let's move on to Roku. Oh, I didn't mean to type it there. There we go. Yeah, so Steve is saying by giving time to your call outs, they work, but patience is needed. That's why I like shares better. That's a great point. If you're struggling with options, then just do shares. Yeah, you're not going to get the huge percentage winners, but that's okay. If you do shares, get your system down, get your edge down, get your flow of your trade style down first. You only need to take one share. You don't even need to take 100 shares. Take one share and practice the art of trading your style or the style that you like with one share. You're not going to make a lot of money, but you're not going to lose a lot of money either, but you're going to see if the trade works or doesn't work. iPhone saying, I think it's about timing of buying the options. Usually, if you are buying the pop through key levels, you'll pay a premium. But if you can wait for a 2-minute or 5-minute pullback to get in, also consider longer dated shares, or I think you meant options, with 2 months, data will get you. Yeah, that was the other thing I mentioned today. If you want to day trade, but you don't want to suffer the premium pullbacks, go out to next week's contract if you can afford to. The key to understand, don't go too far out of the money. The further out of the money you get, the premiums will get burned on the pullbacks, even if you go further out. It'll be less if you go further out in terms of time, but they still, the premiums will still get burned. So let's talk about Roku. All right, so we got the 5-minute chart on Roku up. Let me get the opening candle of the day, which was right here. Okay. So what was I saying about Roku? Right. Let's go back. I didn't post it here. I posted it in the room. But if I recall, it was watch 445.45. Okay. That's the high from yesterday. Apologies, from Monday. So Roku runs up, right? Gaps up on Monday, pulls back, hits probably the 1618 extension right here. Let's check that out, right? So fib extension, opening high, opening low, 1618 extension. All right, so it didn't quite get there. It hit that 1272, popped up. But we know that we have this 445.45 level. Pulls back, tries to break it again, pulls back, tries to break it again, pulls back. Comes back up, pulls back, right? So now you got a descending trend line here, okay? What did I notice this morning? So opening candle, we come up, we pull back. This is probably like a 50%, maybe even a 618 pullback right here. Let's check it. Fibonacci is a beautiful thing, right? Swing low. Whoops. Wrong tool. Swing low, swing high, 618 pullback right here, 2 candles. Hello, ladies and gentlemen, this is an entry right here. Okay, that's an entry right here. Is it an ideal entry? Yes or no, depends on what you were trying to do. For me, I'm waiting for 445.45. Okay, so trade comes up, we pull back, we hit that 618 on the opening range. Trade starts to move up, we get rejected by that trend line again. Trade pulls back, but what do we see forming now? The triangle, right? It loses the triangle, and I've seen this so many times where market makers push it below the patterns because they see what we see, and then it starts to push it right back up. Now, what's happening this whole time? Squeeze, 5-minute squeeze. Okay, where does it start to get interesting? The first thing that's going to catch my eye, 821 crossover. Where does that happen? Right here. So that 821 crossover, it pops up, but then it fails. And this is what gets our triangle here. Okay. It pulls right back. Let me turn off. There's a little noise here. There we go. Sorry about that. But look, 8 comes down. It doesn't cross under the 21. And now it starts to expand right here. What else could we do? We can take this here and draw another line down here, right? Breaks out here. Again, still in a squeeze. RSI is over 50. This is looking good. Indecisive candle, inverted hammer. Inverted hammer could be a reversal signal, right? Because we're consolidating. Now we're pushing up. What happens here? Test the 80 EMA, test the 80 EMA, test the 80 EMA, test the 80 EMA, hammer, breakout, okay? So this is the candle that gets me excited. But what was I saying about 10 minutes before this breakout? And it's all time stamped in the room. Watch Roku. I started seeing this right here. I said, watch Roku over 445.45. Sorry, that's up here. Apologies. I'm getting ahead of myself. 445 is over here. This break of the trend line is what got me excited. That's where I was saying, watch Roku. I was watching it down here, but this breakout right here is really what caught my eye. And even though I said, excuse me, watch 445.45, I was already in contracts here. And I was willing to take the risk because of just the expansion of the moving averages, the squeeze setting up. And remember, Nick always talks about this. By the time the squeeze fires, it's usually too late. So the squeeze fired here right at the breakout of that trend line. Really, really important. I got in here, but for me, I was like, I am not going to say, okay, everybody get into Roku right here because it's risky. But I did know that from here to here, it's not that much, right? So from the breakout here happens at 442.62. My real breakout is at 445.45. So I want to make sure that we're getting this breakout. So that's why I said here, I'm taking the trade. I'm not going to say I'm going to take the trade in the room because I know that there's going to be people in the room that are just going to follow me. And I don't want that. I want you all to really, to own your own trades. But I did know it was a safer entry to wait for that breakout. But look, you get the breakout candle here, you get a really strong candle, you get an inside candle, almost an inside candle, rest candle here. You get your next candle up, and where does it stop? Right at 445.44. 1 penny shy, 445.47. So two pennies over the level that I'm watching for my breakout, right? Next candle, monster move. The premium explosion here was about 20%. And then it just went, right? Inverted hammer, possible reversal here off of that 457 level. But then the next candle, boom. And again, pull back to an 8 EMA here, 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 here. No reason to close this trade out. If you don't lose the 8 EMA, you don't need to close the trade out. Where do you close the trade out? Right here. And I don't even remember what this trade was, but I can say it was a monster trade. Okay. And then, into the close, we have a little bit of a falling wedge. So we might get it, or a flag. So we might get a continuation tomorrow. Let me turn after hours on. Yeah, so it's slightly up after hours, but not much. That's it, ladies and gentlemen. I mean, I know when you do aftermarket analysis and after trade analysis, it looks really, really simple. It's definitely not simple when it's happening, but when you watch the candles and you watch the levels, you just gotta let the rest take place. So let's talk for a minute about contract selection. So the break of 445, what contracts am I taking? At a minimum, I want to take the 450s because that's going to be my next strike. And I think 450 was my next resistance level. Over that, I think 463, I want to say, was my next level, give or take. And I believe there might have been a level in between. I don't have TOS open, but that's why I chose the 450s. And then, of course, once you break 450, these things just scream. There was no time for me to even roll up. I stayed in this trade. Normally, what I would do if this was an earlier in the day trade, I would probably start to exit the trade somewhere around here and then roll up on a pullback to that 21 EMA. But of course, later in the day, it doesn't give you that opportunity to get the roll up and the pullback. So. But the other thing too is as we're starting to move higher, again, let the patterns dictate your trades. So what else could you have done to get out of the trade? So you could see we have a flag forming here. Broke the flag on the same candle, it broke the 8 EMA. But here, look at the TTM squeeze. Where do you peak? You peaked right here. So now your TTM squeeze is the momentum oscillator is starting to dissipate. So this is also where I'm going to start looking that I should start taking profits. So these are the different things that I do on an intraday basis when I'm in a trade and looking to take a trade that helps give me an edge when I'm trading. So, all right, ladies and gentlemen, we've got 12 minutes left. Let me know if you have any other questions in regard to today's trades. I don't know. I don't know what happened on CCIV. There's the entry right there, 27.38. You got a a gap up into this area, failed. You got another test of this area, failed. And then another test of this area, a little failure, and then boom, pop. This is probably what printing was seeing. So, here. Bear with me one second. Let's just log into Benzinga and see if there was any news on CCIV. No news on CCIV. It was just a technical breakout, but very clear one too. Something else I like to do is watch where RSI breaks out. RSI broke out here, could have taken the trade down here. Look what happens on that breakout. Your EMAs start to stack. Look at how it rides the 8 and the 21 all the way up. Right? Get that break of the RSI here. You get that nice pop candle. Pull back to the 21. pull back to the 21, pull back to the 34, pull back to the 34, pull back to the 21, and now we're riding the 8 all the way up. See how it doesn't close under the 8? Doesn't close under the 8. Does that make sense? Okay, so we have 10 minutes left. I don't really have time to do any scans or anything like that. So does anybody have any chart requests? Anything you want me to take a quick look at? UPST. Looks pretty good. Let me take my EMAs off here. Put my clouds back on. We're holding this volume shelf pretty nicely. Last swing high anchored VWAP is acting as resistance right now. Let me drop a swing low. Yeah, so we're right at a critical level. We need to pop over 135. I think once we clear 135, we should start making our way back up to 170. Where I would stop out if you're in, probably under 107. If you're in shares, if you're in contracts, you have to be careful under 115. Levels to watch on NIO tomorrow. I don't have my TOS open, but let's see. Levels to watch. I would watch 54.26, 57, and then 60. VUZI. Let's take a look at VUZI. VUZI's looking fine. I have a ABC retracement with a potential 1-2 in our wave 3. RSI still breaking out. TTM squeeze did fire. It has a nice slingshot squeeze, but it looks like we went back into a squeeze today. So we are holding over the 21 weekly moving average. So I like that. We are making higher lows, right? So you have a low here, you have a higher low here. Where we're wrong is under 1552. So if we go under 1552, then there's something else going on. If we go over 2036, then I think we'll probably hit 23, then 26, possibly 28. I have wave 3 terminating somewhere around 30. That's where I would start. I would probably start to take a trade off at around 2650 on the way up to 30. And then at that point, I'd be waiting for a pullback. But yeah, I don't want to, guess what VUZI is doing. I'm, take it day by day. But so far, it looks pretty good. If we look at the candles, yeah, we had a bit of a double spinning top here, but we also had a double spinning top here, and then we had a nice candle up. So, yeah, I think it still looks pretty good. Again, where we're wrong is under 1549. July 16, 20 calls. Yeah, I think those should work still. What I would be careful of is if we get a close under 1750, because then we're back under the 21 weekly moving average, and then it may take more time to break back over and get back higher. So just something to keep in mind. Thoughts on Apple? Apple has been showing relative strength to the market for this week. We're at Wednesday, right? So Monday, Tuesday, Wednesday, green, green, green. So where we're stalling, or where we stalled today, was right here. Previous high of 137.07. We broke that today, but look at where we closed. We pulled right back under. So right now, the way I look at this is basically forming a cup. The question becomes, do we just do the cup and break out? Or do we potentially, maybe form, a little bit of a handle before we break out? And so, maybe we have resistance and we pull back and we do something like this, very possible. But again, I don't like to guess what things are doing. Something else I just noticed, we had that RSI breakout right there over 50 over the trend line. We also had a squeeze setting up, but we're 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We're 11 days into this squeeze. We're past the prime of the squeeze. So could we continue higher? Absolutely. Look what happened back here. We had a nice squeeze set up, and then we fired off. Squeeze was setting up in the falling wedge here, and then it exploded up. Okay, same thing happened here. A little bit more of a symmetrical, or just a wedge, similar type of wedge, right? Squeeze started setting up. We broke out. We broke the 21. Squeeze fired. We moved up. So this is how I trade. There's no secrets. There's no man behind the curtain magic, right? I'm showing you on the screen exactly what I see. And eventually, if you spend enough time charting, looking at charts, you'll be able to do these things. But it took me a year, maybe a year and a quarter, 12 to 16 months to really get proficient at doing this. And that was spending hours a day charting. So if you're doing this full time, you'll get there faster. If you're doing this part time, it will take you a little longer, but you will get there. But that's learning this stuff, learning the technical aspect of charting and trading and everything like that. That's only half the battle. The other half of the battle is psychological, and that is a bigger monster to tackle. That could take years or never. Some people just aren't, mentally able to handle the stress of trading. That's why, I go with the whole body, mind, soul type of approach. You got to eat right, you got to exercise, you got to meditate, because if your mind isn't right, your trading's not going to be right. It really all works together. So all right. Yeah, I mean, I wouldn't be going long on Apple. Where I would be going long is probably back here at 127. Again, because that was the right technical setup for the move that we got. Knowing when to get in is really crucial. Getting in on the tail end of a move is dangerous. Could you continue to get higher? Yes, but the risk to reward is really not good. Getting in on, something that's just breaking out, that's where you want to get out, because the risk to reward is really high. Thoughts on TIGR, short-term, long-term? The problem with TIGR, and the problem with a lot of these Chinese stocks is that they're really prone to news moving them. And, I've been talking about how Chinese stocks have been moving in the last couple of weeks. A case in point, Baidu, JD, and Baba. Futu and TIGR, very similar. Do I like them? Yes. But I don't trade them, short term. You have to look long term. So when it comes to TIGR, I would do shares or leaps. I would not do anything a month out, because this thing likes to get crushed. But nice double bottom here, broke the wedge here. RSI breakout right at this second double bottom. Squeeze is starting to set up. Fired. RSI came back to 50, bounced. These are the things that I like to see in a chart that looks strong. The other thing I'm looking at too is a potential wave 3. So this could be an A, B, C, D, E pullback. and potentially waves 1, 2, 3, 4, and 5. Now, how would I know if this was a 1, 2? So the easy rule is on wave 1, wave 2 generally pulls back to the 0.382 Fibonacci retracement. So we pulled right back to that 382. We did lose it a little bit, came down to the 50%, but pulled right back up. So I'm very confident that this is a 1, 2, and that means that we're in wave 3. Now, wave 3 tends to be the longest, but is never the shortest. And so what I would say, I already have my trade plan in place, but where I'm excited is over $30, because over $30, we've broken the high of wave 1, and we should start to move towards 38 to 40. I think around all-time highs, that's where you're cautious. So if you're in shares, it's probably where I would start scaling out. But it's always good to start scaling out at targets in between where you enter and where your ultimate target is. There's two ways to trade. You can compound on the way up, or you can go in full position in the beginning and scale out. There's no right or wrong way to do it. It's all a matter of preference on how you trade. If you are more prone to sell faster, then you're probably better off taking a bigger position in the beginning and scaling out. But if you have diamond hands, then you can scale your position in. Again, no right way or no wrong way. It's just what's you're most comfortable with. PLTR. And you'll notice you guys are calling out. I'm not like, these are already charted out, right? My homework is done. Every weekend I spend 2 to 3 hours charting. I update my charts. I look for, really every day I do, but I spend a lot of my time on the weekend prepping for the week. So all my charts are done. All my charts are charted out. My trade plans are set. So if somebody calls out, like for instance, printing called out CCIV, well, I already have a plan ready for CCIV. So when he called that out, I'm like, I'm in. I don't even need to think about it. I don't need to go to the chart and fiddle with the chart and figure out my entry and figure out my targets, because by that time, maybe the trade's already gone, right? But he called it out. I called up the chart. I liked it. I entered. I missed maybe 3% over what his entry was. So be it. That's fine. Actually, I already exited the trade. I have leaps in CCIV as well. But I took a quick like 18 or 20% trade on that in 7 minutes. So I don't recommend doing that. It's not usually what you should do, but I'm pretty confident in the way I trade. So I liked what was happening. I saw the volume, yada, yada, yada. But again, squeeze fired back here. RSI broke 50. Trade moved up. RSI pulled back to 50. Stock pulled back to the 21 EMA, started to bounce. RSI bounced. We got the move. So, every stock is going to be a little different, but the technicals are all very similar. I mean, there's no magic here. This thing is, it looks like potential wave 5 here. Possibly, or sorry, a wave 3, because we have, let's say, your wave 1, 2, potential 3, 4, 5, right? And I'm just guessing. I'm not, charting this out, just guessing. But let's take a quick look at where this pullback was. Remember how I said, generally on wave 1, your wave 2 pullback will come to that 382. Let's check it. Swing low, swing high. Where did we pull back? To the 50%. We came to the 382, we lost it, but we came down to 50. So these things don't always hit exactly, right? But you got to give it a little variance. So the 50% is good enough for me. As long as we don't come below that 618, I'm okay. So you could have taken a pullback entry here on CCIV and then taken the trade up. What else do we see? Falling wedge, right? You could even call it a flag. Where does it break out? Right here. Consolidates for 2 days, pops up. So, you know, this is my job. This is what I do for a living. And like anything else, like any other job, I'm only going to get better at it the more I do it. You know, doctors practice medicine they go to school 4 years for undergrad, 4 years graduate, 2 years residency. So they're practicing 10 years before they can even see a patient, you know? So don't beat yourself up if you've been doing this for 6 months, for a year and a half, because it takes time to do this. But if this is what you want to do, we can help you get there. You got to take personal responsibility for putting in the time and the effort, and understand that you're probably not going to be profitable for your first 12 to 18 months. But after 12 to 18 months, you start getting that consistency, you're going to start really finding success in doing this. And listen, there was a chart that I posted many months ago. You know, something like you make $100 a day, it's like 20,000 a year. If you make $250 a day, it's like $52,000 a year. So small wins do add up. It's just getting consistent. That's the problem. A lot of traders will find success, but then they give away all their profits the next day. As long as you're not, as long as you're practicing proper risk management, you won't blow your accounts up. But you just got to put the time and effort in to get better. We can only show you so much. You got to be willing to put in the time. So let me just check to see if there's any further questions before I close this out. Yeah, pattern recognition, Steve. That chart recognition book and the pattern encyclopedia from Bulkowski are solid gold. Those are your Bibles. Yep, paper trading is good. Problem with paper trading though, iPhone, there's no emotion. And so you can use paper trading to test your entries and your exits and everything like that. But when it comes down to actually trading with real money, that's when the heart starts pumping. And that's when mistakes get made. So just understand that. Troy, worry about consistency and risk first. Money will follow. I agree. Stephanie, put the PLTR chart. I will. Steve got it. F. Lopez, share this video. Discord, you know I will. Ladies and gentlemen, I'm back. This is my first trade talk since vacation. I appreciate you being with me. Always appreciate your time. Always appreciate your time. Listen, this is a journey. This is not a sprint. This is a marathon. This is an ultra marathon. So we need to eat right, treat our minds right, treat our bodies right, put our time and effort in. Success will come. I promise you that if you put in the time. We're here to help. So if you have any questions, need anything, just reach out to me. I'm always around. Always good to be with you all. I'll catch you tomorrow in the markets. Have a great night, everyone.